Okay, we're going to go to Aaron Dunn and Power Check right now. So let's bring in Aaron Dunn if we can, and I think that we can. Aaron Dunn, welcome. Listen, it's one of these fluid days with a lot of news that is happening right now, Aaron. So we appreciate your patience.
Yes.
You're a scholar and a gentleman. You're head of value equity at Morgan Stanley Investment Management. Let's move on. Let's talk about it. What is top of mind, Aaron, for you?
So I think one thing we're really paying attention to here is really the broadening of the market we think could happen. I mean, you saw a little bit of this the back half of last year. The economic uncertainty out there has really, I think, kept the market very narrow. And when you look at what sectors have really done well this year, it's tech, communication services, utilities, and industrials, and that's really the AI trade. So investors are searching and staying with the predictable growth that's out there. What we think, and we're really looking for the back half of the year, is potential for corporate confidence to come back. We did have some capital spending in the first half of the year, but that was really just a pre-buy ahead of tariffs. Can we get some real capital spending? The ISM has been sub 50 now for two plus years. Can we get some economic activity here in the United States to actually drive construction, to drive activity higher? And one of the things that's really relevant for us is really turnaround stories as value investors have not really, in our view, been paid for, because you don't have the underlying economic growth to really drive the sort of underlying story with the turnaround. So we're looking for that. We think there's a lot of excellent opportunities out there that are just not being paid for, not being paid attention to until we get some economic certainty.
Yeah, and there's some interesting names out there as well. You got Steel Dynamics, you've got United Parcel Service, better known as UPS, and you've got Clorox. I don't know if I've ever seen a guest come on and talk about either steel, shipping boxes, or bleach. So I guess let's dealer's choice, Aaron. Let's start with bleach. What is Clorox was all the rage, unfortunately, during COVID. What is Clorox today?
Yeah, it's fascinating. Consumer staples, and really, if you look at a lot of what we would probably deem the defensive sectors out there in the market, staples are 5% of the S&P 500. That's the lowest level since the tech bubble of early 2000. So it's very similar to today. We would add some ballast to the portfolio. Clorox reset their kind of full year expectations with an ERP implementation just recently in earnings. And so we think that's past us. This is a company that's great at innovation. It looks relatively inexpensive. It's a defensive company that also doesn't have the food deflation issue that we think a lot of other staples are going to have. So that's one where we think it's found a bottom. It's really kind of where we think there's not a lot of downside to it and a lot of upside optionality and potential relative outperformance should the market roll over from all-time highs. We would just think of that from a ballast perspective in the portfolio.
Yeah. What about Steel Dynamics? Not a company we talk, STLD, not a company we talk about a lot.
Yeah. And you saw Berkshire take a position in Nucor today. And it's a very similar situation with Steel Dynamics and the fact that you have a company that's a low-cost steel producer in the U.S. This administration and also through the Biden administration really protected the steel industries through 232 tariffs, and that continues. And prices have really remained elevated with that tariff in place. So we think it's very interesting. They have a variable cost structure. So we believe that if construction comes back, infrastructure spending starts to get a little better, CEO confidence gets better, they loosen the purse strings, that there's a lot of projects out there that need steel. And we believe that the demand for steel is going to reaccelerate. If that's the case, Steel Dynamics, as a low-cost variable producer, is going to be fantastically positioned. Yep. The other interesting thing is really about UPS and Steel Dynamics is these are execution stories. And what that means is, Steel Dynamics had two big projects that they've had finished this year. And so they're bringing those online. They bring those online, we're going to have a sizable expansion of free cash flow as CapEx comes down and those projects start to contribute to EBITDA. This company's purchased 25% of its shares outstanding over the last 4 years. We think this sets up again for another situation where they're really returning cash to shareholders. Looks very interesting to us.